You can sell stuff online. Okay, so but yeah, regulations are there and they're bad. But what you do is you get the genie out of the bottle. You open Pandora's box, and you get it to a point where too many people are doing too many things, and the notion that these things are bad when they improve the lives of millions or billions of people, it becomes unstoppable. It becomes impossible to sell that notion in that respect. And then eventually the older politicians die or retire, and the newer ones that come on, they run on a campaign of reform and change. Governments do change. It wasn't too long ago that in the South in the United States, if you were black, you'd have to go to a different part of the restaurant. You'd have to run the back of the bus. And that was just the way life was. And people said, well, that's the way it's always going to be. And then very quickly the civil rights movement comes in, and the most racist places of our country were forced to change. And within a few generations, it's a very distant past. And we look at it in storybooks, history books, but yet there are still people alive who actually endured that. It wasn't too long ago that the Soviet Union was around. We have a lot of Eastern Europeans in IO Global who are old enough to remember living in the Soviet Union. And when they were there at that time, even in the 1980s, there was this perception that the Union was going to be there forever. And now it's gone. The Iron Curtain has fallen. You go to Mongolia, you go to Georgia, you go to all these places, you see all these ruined monuments. And they're actually like anti-communist monuments. You go and there's like vendors selling shit and capitalism all around it. You go to Vietnam, and if it rains, people come outside and sell you umbrellas. It's an amazing thing. So things can change super quickly on both the social side and on an economic side and on a political side. And it really comes down to this what I call the social sinkhole effect. So sinkholes never start from the top down. They start from the bottom up, and they kind of and eventually you drive and you fall into it. So you can go over the same road over and over and over and over again. You think it's a strong, normal road, a strong, normal institution, and then one day you just fall in, and there's this huge ditch, and sometimes it kills you. The collapse of governments, ruling societies, legitimacy of institutions, exactly the same way. The institution doesn't just magically disappear or something like that. It starts eroding over time and over time and over time. By the time you finally fall into the sinkhole, after the fact, everybody says, well, of course. In my Twitter feed, I have all these kings, and it's from King Edward, I think, V's funeral. He was a British monarch, and he died in, I think, 1910. And he was related to pretty much every monarch in Europe. So when he died, like everybody came. The Tsar came, and Wilhelm came from Germany. And so you have all these kings who have their uniforms on, they're prim and proper and pristine, and they collectively controlled the world. They had all the money, about a third of all the landmass of the world, the biggest armies in the world, and they had been running monarchies that had endured for centuries in one form or another. 10 years later, almost all of them were completely removed and depowered because of World War I. The whole system just magically changed. Now, when you retroactively look at it, you start examining it, the social sinkhole was there. Their monarchies had been deteriorating in legitimacy and control and power and industrialization and mercantilization. All these things had been fundamentally changing them in a way. But they were blindsided to it because they were still thinking the institutions they lived in were enduring. It wouldn't take a lot for the Securities Exchange Commission to just no longer exist, and for that regulation to be totally decentralized. It wouldn't take a lot for the Federal Reserve System to not exist. It was created in 1917. It hasn't exactly been, this amazing American institute. Actually, 1913. Yeah, that's right. 1917 was when we entered World War I. 1913 is when we created it. Jekyll Island happened a little earlier. But it was not an enduring American institution. In fact, we'd gotten rid of it a few times in our history. We tried to create it and got rid of it, created it, got rid of it. So nothing stops America from creating an algorithmic stablecoin and representing that as the US dollar and having it constrained by algorithms in 2050 or something like that. Maybe that's the new international reserve currency and everybody participates and we just manage the lion's share of it. Why would we do that? Well, a crisis happens. We fall into the sinkhole. But the crisis is created by the gradual erosion in legitimacy of institutions. And that's where we're at in society. Institutions, faith in them is at an all-time low. Where does the anti-vaxxing come from? Well, because people don't trust anybody anymore. They don't trust science anymore. They don't trust the media anymore. Because honestly, a lot of people are lying these days. People who are supposed to be objective aren't. People who are supposed to be honest have an agenda. No one is giving you the full story. You don't perceive it. And also it's getting harder and harder to determine fact from fiction. We have deep fakes. We have propaganda groups that manufacture news. There's all kinds of things that are on the horizon or already here that are destroying our ability to critically analyze the world, and the volume of information is increasing. Furthermore, all the things that were hidden from us are now shown to us on a daily basis on TikTok and YouTube and so forth. When my parents were growing up, they had a newspaper. Somebody made a decision what was in it, and they would see that, and that was their reality. If someone died, if there was a collusion of a few people, they could hide that for months if they wanted to, and then explain it any way they wanted to. Now, you see it on your phone 5 seconds after it happened from 12 different sources, everyone annotating it differently, and all of them have been perceived equal legitimacy to the state media and to the mass media. When you have something like that, the institutions built under the old system can't survive. So when those institutions erode, eventually the sinkhole will fall and everything is up for grabs. The definition of the Westphalian notion of nation states, the definition of money, the definition of consent, privacy, everything is open for redefinition. And eventually we'll reach a new steady state. And maybe it'll be an overreaction and there's a Hegelian dialectic and we kind of meet in the middle after these things clash. Or maybe it's something else. Who the hell knows? But that's what makes it fun. That's why we're here. We're all pioneers on this road. We all have differences of opinion, and some are more libertarian and some are more authoritarian. And each and every one of us not only has an opinion, we have protocols. We have tokens. We have movements. We have groups of people, and they work with us to basically reflect that and build communities. I started Cardano as 2 people. Now there's over 1 million people in the Cardano ecosystem, and they're incredibly loyal to the extent that they're tattooing our damn logo on their bodies.
How does that feel? You see someone tattooing you.
I'll show you the craziest thing I've ever seen in my life. The absolute craziest thing I've ever seen in my life. Someone sent this to me over Twitter. They tattooed.
Can we get it like a cutaway of
yeah,
this?
they tattooed my face on their body.
What? That's so weird.
I don't know the person. It just did it and sent it to me.
You have a super fan there, Charles.
Yeah.
You may get a few more people watching this who are like, I love what this man has to say.
That's why we started investing in a security detail. So anyway, that's where we're at. And a company's done this,
weird.
Right? It's crazy.
So weird.
And so you see these types of things, and it's not any different than the Apple logo or the Harley Davidson logo or these things. But people believe so strongly in this because it's not about money to them. It's about saying the institutions are about to go through a magic reformation, and I want a seat at the table for where they go. We believe in that. That's the ultimate true message. I think that's the truest thing that Satoshi gave us. If there was anything there, it wasn't decentralized money. It wasn't Bitcoin. It was the freedom to believe that we actually have the ability to change the systems that we were born into, whatever those systems happen to be.
I think that's such a beautiful note to wrap things up there. We are, of course, at the Satoshi Roundtable in Mexico. We're going to go and enjoy the wonderful festivities of the night, enjoy this group of people that I believe is truly changing the world.
Yeah.
You're one of them. So thank you so much for chatting with me and for being here.
This was so much fun. Thank you so much.
Charles Hoskinson, it's been many, many years since I last interviewed you.
Yeah.
The last time was pre-Ethereum.
Dear God.
Before the release.
Wow.
So let's jump back in time. Let's look at your last few years in the crypto space, because you have done a lot.
Yeah. There was a spout of alcoholism and depression and despair, but
wasn't there for all of us?
No. After Ethereum, I took some time off, about 6 months, and then I was actually going to leave the space. I did a TED Talk, and I said, all right, this is my exit point. I'm going to tell everybody what the space is all about, and then I'm just going to go do something else. And then after I did the TED Talk, I got a lot of calls, and people said, you should start another company. And I said, I'm 0-2, because I did Invictus and Ethereum, and nobody liked me. So I said, I don't want to do anything more. And they said, no, go to Japan. Go live in Japan for a little while. There's these crazy dudes, and they want you to do like the Ethereum of Japan. I said, why me? I've never been to Japan. I don't speak Japanese. They said, no, they really want you. They love your TED Talk. I said, okay. If you buy me a ticket to Japan, I'll go and do it. So I flew out, and in February of 2015, I touched base in Osaka. We set up a small little hub there, and then a few years later, we launched Cardano, and that really is what we're known for today. And we've grown from 2 people to 500 people in my company. We're in 52 countries. We've done dozens of products. We do government contracting for transformational services like in Ethiopia and other places. We do identity services, payment channels. We do Fortune 500 contracting. We do VC stuff now. It's gone from nothing to billions in the last 8 years. It's just been a wild, insane ride. And I've met so many amazing people. You know, I've gone to South Africa and hung out with the president there in its ranch. I've met crazy religious leaders. I've met engineers and technologists. Our engineering division and science division, we've written 111 papers, 10,000 citations. It's the largest research group in the world for cryptocurrencies. And it all started because I did a TED Talk in Bermuda, of all places.
Always starts with a TED Talk.
Always starts with a TED Talk,
It
right?
does.
And this was a TEDx in Bermuda in 2014, and I enjoyed little pink sand beaches. And I actually thought it was going to be the last time I ever talked about cryptocurrencies. It was October of 2014.
Why did you think that? What made you think that this is the end? I have contributed everything I could to the space.
Well, no, it wasn't about contributions. It was that I could contribute, and there was a lot to do and a lot to build. The issue was I didn't get along with the people. You know, and
So I
they didn't
want
get
to
along
dive
with
into
me.
that as well.
Sure.
You said earlier, you said they didn't like me, and now you're saying you didn't get along with the people. What created that friction? Where does that come from?
So there was always a tension about process and ideology. So on the process side, in the cryptocurrency space, there's a tendency to say move fast and break things. Everybody just wants to release something. The challenge with that is that the person who pays for the consequences of failure is not the person who releases it, it's the person who consumes it. And there's no liability going backwards. So you get paid up front to go build some protocol, and then you sell the tokens, you get a lot of capital, and then let's say a year down the road there's a DAO hack or an issue with Thorchain or whatever. The problem is oftentimes the person who suffers is a retail investor. The person who suffers is an everyday person who just wants to use the protocol for something. And I felt that was a perverse way of doing things. And so I said, well, if we're going to do this properly, let's use the scientific method. So let's go ahead and write papers and write specifications and write code and test it properly. And a lot of people say, well, we can't do that. That takes a really long time. And I said, well, if you don't, you're going to have to do all of that, but after you release the product and while trying to repair the product after a problem's occurred. So there was a process and a philosophy issue there, I'd say, that struck. In the other ideological thing is that I've never really been interested in the developed world. You know, there's all these markets like New York and Australia and markets like London, and that's where all the money is. So people build fancy, beautiful offices, and they put them in the Gherkin or put them in Brooklyn or whatever. And they say, oh, we're cryptocurrency entrepreneurs. And all day long, they just sit around and they talk to Fortune 500 companies and they try to convince them, change some product you have over to blockchain, whatever the hell that means, and then somehow we've done our job. And I've always looked at this technology in a much more transformational way. The vision of our company, for example, is that we want to improve the systems of the world for everyone everywhere. And so we really mean that. So where do you go? You go to the places that have bad systems. Well, where do you have bad systems? In Ethiopia, in Uganda, in El Salvador, in Argentina, all these places where there's corruption and there's voting problems and rule of law is not as good as it needs to be, and capital controls and issues with the property ledger, and the money is unstable, and it has hyperinflation and all kinds of problems. So the point of the technology we build is you don't just build a payment system, you're building everything. Once you have economic identity, once you have a blockchain-based solution with smart contracts, suddenly the same thing that can be your payment system is your voting system, your property system, and all these types of things. So I was always ambitious for transformation at a scale of the world, not at a company, not at an individual. It was never about how do we issue a token, make some money, and say, we're now rich. It was more about saying, have we taken the average person of a country and left them with something that's made their life considerably better? The problem is this exposes you to a lot of risk. You have to go and live in these countries. You have to go and visit them. You have to build infrastructure. You have to spend long periods of time getting to know and getting exposed to all kinds of bad stuff. And the average deal takes 3 to 7 years. Furthermore, after you've succeeded and you built all of it, it's actually not as profitable as, let's say, an ICO or any of these other things. Why? Because it's an open system. It's decentralized. There's no central choke points or things like that where a Microsoft or a Google can plock themselves down and own the entire marketplace. The entire point is kind of spread the wealth around to all of the people. So a lot of people say, you're crazy. Why would you want to go and do this? This is strictly humanitarian, and even so, like, no one will ever let you actually change anything. And that was true in 2014 when I did the TED Talk. However, just in 2021, we now have a situation where nation states are adopting these things. We have a situation where every single reputable and disreputable place alike is actually looking at blockchain technology and wants to adopt it. So we're kind of coming into the philosophy that I started in the space with, and which is great for us because we actually have the resources and people to service a deal at a nation state. And we actually know all the people we need to call and all the regulations we need to write and so forth. So it's been an amazing journey, and I never really believed, I knew academically and structurally how one would get here, but I never actually believed we'd get here. I figured something would kill me along the way.
Well, it still might.
Yeah,
Don't
there you
hold
go.
your breath. I mean, so you really found that in the early days that humanitarian aspect was missing? Because I remember the rhetoric from back then. It was all about banking the unbanked and, how do we help people? Did you find that in practice this just wasn't happening?
Well, look at all the top 10, Ripple, and look at Ethereum, look at Polkadot, look at EOS, all these people who have been in or around the top 10, they've raised billions of dollars, they've built great infrastructure. Where are their home offices? In San Francisco and in New York with Consensus, all these places. And where are they deploying projects? Yeah, they have a few Africa projects here and there, but if you actually have real conversations with them, they say there is no value here. They don't actually look at the unbanked as an opportunity to build a marketplace and to build out an ecosystem and over a 10, 20-year period grow with them and create liquidity for them. It's always about, hey, look, we got Mercedes-Benz to issue bonds on the blockchain, or hey, we got this Fortune 500 company to do something, or Microsoft is now doing ION on the Bitcoin blockchain, or whatever have you. There's really been no focused attempt to try to bridge those two worlds in a reasonable way. Now, there are some ventures that are smaller in scale, like BitPesa and others, who actually have done that, and they've put their money where their mouth is. But the proportionality of wealth distribution, media coverage, every time we announce something, there's enormous skepticism in the space. They pay lip service to this idea of remittances and microfinance and insurance and banking the unbanked and how they're going to revolutionize all these things. But then we only talk about yield farming, and we talk about DeFi, and we talk about how much money people are making from Dogecoin. Are these problems of Ethiopia? No. These are strictly of the developed world. So I think there's a mismatch between the coverage, the actual execution, the allocation of resources, and the markets we tend to focus in. That said, what's probably going to end up happening is as these markets open up, they actually will switch. And a lot of people who are currently in New York and San Francisco will go to Zanzibar, they'll go to Addis Ababa, they'll go to Accra because there's a gold rush. And we see this actually in Africa, mostly in Lagos. There's a huge amount of people flooding in there. There's a lot of Bitcoin growth, Ethereum growth, and other things in Nigeria. And we see it in a few other places, in like Nairobi, for example, in South Africa. So that's very encouraging. And it's nice because we've always been mission focused, and so we like the idea of good competition and people coming in. But it was a really lonely 8 years. It was really lonely. We saw very few people from time to time. Every now and then you'd run into a Stellar guy, every now and then you'd run into a Binance guy or something like that. But there were far more scams than there were legitimate ventures, and it was almost impossible to raise money. When we talk to venture capitalists or other people talking about opportunities in these places, they say it sounds like a good way to lose a lot of money. That was literally the consensus opinion. But things have changed a little bit. So I'm optimistic over the next 5 years, and I think that's really what's going to be the dominant driving force of growth for us, especially after the next crypto winter comes. The summer that comes won't be in the United States. It's going to be in Africa and South America and Southeast Asia.
I would say that, the DeFi and all of that, earning money that you're talking about, I would argue that it's more about people safeguarding their money right now. Like, it seems so exuberant and, there's this crazy boom in prices, but we're seeing unprecedented money printing from the government. We're seeing people get terrified and wondering where they can park their assets. I honestly think that the big DeFi boom is because no one's earning any interest in their bank accounts anymore. They haven't for like decades. And so now they're actually getting, lo and behold, they might be able to get 4% on Coinbase for staking things there, or they can get exorbitant money on other projects and take matching risks. But it definitely is kind of, I feel like we're coming to a fall with some sort of global event when it comes to the money supply and the need for decentralized money that isn't in control of governments. What are your thoughts on that? Like, where are we headed?
Yeah, so there's a lot to unpack. First off, when you look at last year after COVID hit, I expected to see Bitcoin go to the moon, and the dollar not do so well, and actually the opposite happened.
Define moon, sir.
Well, so last year Bitcoin didn't do so well. Even ADA, we went to 2.5 cents. Everything in the top 10 got hammered, and there was a mass flood to the dollar. So the kind of the common lore of the cryptocurrency space is we're a counter-cyclic, we're like an inflation hedge, and when there's a bear in the equity markets or bond markets or an inflation concern, like gold, people would flee to Bitcoin and crypto assets.
You didn't see that in 2020 because it was a steady growth.
And the first 6 months of 2020 were pretty bearish. There were days where we dropped 40% in one day, the entire market. 2021, on the other hand, was the mega bull cycle. So as the market started recovering, we went from a few $1,000 Bitcoin to almost 64,000, 65,000. So it definitely, people did wake up, and it was a lot reminiscent of 2017. Now the DeFi boom and the NFT boom is kind of a micro boom within it. I think that's mostly caused by demographic changes. So if McKinsey and others have done surveys where they said, people under the age of 30, what are you more likely to buy, a crypto asset or a traditional asset like a commodity, a stock, a bond, these types of things? Overwhelmingly, I think over 80% are likely to buy a crypto asset over a stock, a bond, and equity. And what's happened is there's been a large wealth transfer from the baby boomer generation to the younger millennial generation. And there, because their buying preferences are more crypto focused, we've seen a steady rate of retail money kind of percolate its way into the crypto markets. Now, one area where we did see a lot of growth, the second half of 2020, we saw a lot of institutional money for the first time enter the cryptocurrency space. So I think those two factors together were leading causes of the entire boom cycle, and it was a big driver there. Now, the question is, what is inflation? If you look at the dollar, real inflation at the moment is probably 6% this year. But then certain certain subclasses of commodities like lumber and other things, it's just been horrendous. They've doubled or tripled in prices. But that's probably ephemeral, where those prices will go down, but there's some structural inflation that's probably at about 6%. To your point about returns, it's really hard to find low-risk returns that compensate for inflation and then get you a decent amount, like 3% or like what in the market's giving you 9%, 12%, 15%? That's not high risk. So this crypto thing, although it's very volatile and it seems very risky, maybe its risk is comparable to the things that are inside that class that tend to get returns like that. And that's something that the market's starting to agree with. What's exciting about the developing world, however, is there's a lot of things we can do to massively optimize the economies there that can get phenomenal returns for Western investors. Like, for example, in lending, there's a lot of people, like you go to El Salvador, the day rate of lending is 20% per day. 20 to 40%. So what they'll do is they'll go and borrow $100 to buy a lot of things to sell. They'll sell it all for 150, and then they give 120 back to the person that they borrowed it from. It's 20% day loan, and they make $30 profit. So if you walk in, you can do things like 3% per month. And it seems insane and euthyrist. Oh my God, who would do that? But actually, that's a massive discount from the existing loan structures that they have. And if you can find ways to spread risk around, collateralize that, get NGO guarantees, it is possible to see financial products constructed that have incredible returns, but also dramatically change the entire lending environment. And instead of violent gangs lending money at usurious 20% per day rates, you have actually like Goldman Sachs lending money. And then over time, competition comes in, and as credit scores are constructed, the interest curve will go down. There's also about $10 trillion of illiquid wealth all throughout the developing world. So land, raw materials, companies. Like before COVID in Ethiopia, SMEs were growing at 10 to 15% per year. And just great balance sheets, lots of cash flow, great loyal customer bases, but no liquidity because there's no stock market, these types of things. So suddenly now with the crypto market, now you have an STO. Now you actually can do a micro IPO at the $25 million, $50 million range, and you can piece investors together at small rates all across the entire world, like a Robinhood style or something like that. So that's a very exciting and attractive thing, and it's definitely going to be led by the millennial crowd. And as they get wealthier, they're only going to continue investing money in it. So I'm very bullish long term for kind of real FI. So that's DeFi in the developing world with identity and regulation attached to it, that category I think is going to grow exponentially and probably be worth more than the infrastructure protocols in the long term.
So I want to delve into what's in the future for Cardano, and I think to kind of understand that, it's probably helpful to actually rewind even further. So I want to talk about the departure from Ethereum and then your days prior to that, because you've been involved in crypto for a really long time, and what I find fascinating about crypto is that it's not documented at all. You try and look online about what was going on in the early days, and there's nothing out there, and I think that's by design. But I also think that it's helpful for new people coming into the space to understand what people were involved with in the very early days, because you have these people who are leading incredible teams who are changing the world now, and they think, this is their project and they did really well. They don't understand what they came from and all of the things that they've actually been a part of. And I think that the impact that so many people in the crypto world like yourself had is absolutely a lot larger than people realize. So I mean, pre-Ethereum, you were with BitShares, right? You helped out. So tell me about that journey. Tell me about how you got into crypto. Tell me about BitShares. Let's dive into all of that.
Yeah, so pre-crypto, it started in the 1980s with a lot of people. I'm 33, so I was born in the 80s, but I don't remember the 1980s because I was 3 by the time I left. But there are a lot of people in our space who actually do, like Nick Szabo and Wade Dye and Adam Back, and before he died, Hal Finney, and there, people realize, hey, this internet thing, the instantaneous movement of information would infer that it's possible to do the instantaneous movement of value. So we said, if I can send an email, I should be able to have email for money. So why don't I have that? So it was very obvious that there needed to be some sort of payment layer, payment system inside the internet, and some sort of digital money of the internet. And actually it resurrected all these things of private monies, global currencies, and international reserve currencies. And there's a lot of theory on that. Like there's Murray Rothbard wrote about it, Mises wrote about it. So there was a utopia and an excitement in the 1980s of cypherpunk money, cypherpunk cash, cypherpunk movement of value. Kind of like the early days of AI. In the 1950s, there was all these AI researchers got so excited about the prospect of artificial intelligence, and they had overly optimistic estimates. They said in 1960, 1970, we're going to have robots and computers we can talk to, and like AIs everywhere. And you see great shows like Lost in Space and so forth. And they were prognosticating a world of wonder. And it was the same thing with the cypherpunk movement. They were kind of prognosticating this crypto anarchy, and you have books like Cryptonomicon and so forth. So that all kind of died out. And then in the 90s, with the internet boom, it came back through centralized efforts like DigiCash. So what was his name? Yeah, David Chaum was the big guy there. He was a brilliant guy. Interesting ideas, but the problem was that most of the solutions required a middleman to work. So you could get anonymous money, you could get digital money moving, but you needed a central ledger for these things to work. And a lot of people were trying to build their way up to something where they could get rid of the middleman, because they said that, well, we have middleman, what's the point of having this on the internet? It's not decentralized. So then Bitcoin came out in 2009, and it really showed that you actually could run at scale, a reasonable scale, decentralized money. And a lot of the adherents in the early days of Bitcoin were from the internet societies and, from the peer-to-peer foundation and for, cypherpunks that were kind of leftovers. And they were saying, wow, this is so cool. We actually solved this problem. But it had no value. And so how people actually acquired Bitcoin was they usually mine it, or people just send it to you, and it had no value, so it was basically free. So, in 2009, it wasn't inconceivable to ping someone over a message board and say, could you send me 500 Bitcoin? And they'd be like, oh, yeah, no problem. Oh, here you go. And so I came in 2011, and I started mining, and I set up some really beefy rigs, and I had a bunch of 5850 AMD cards in Crossfire. One set would give you 1.2 gigahash, and remember, it was really cheap at the time, like $4 a Bitcoin. So you're running this thing, and you're like, I'm going to make like 20, 30 grand running this thing, and I did. And that's like 50,000 Bitcoin. It's like, yeah, okay, this is great. This is so exciting. But then what I started doing is spending them and giving them away and things like that. So I bought an Xbox 360 on this little thing called BitMint, which was like kind of like an eBay for Bitcoin. So you'd find cool shit, and products and services would be listed. And I got an Xbox for 30 Bitcoin. And I was like, yeah, this is awesome. This magic internet money bought me this amazing gaming machine. I won't get rid of it now. It's like a $3 million Xbox.
Right.
That's an NFT if I've